So hello everyone and welcome to the 88 MPH community call. My name is Whipper and I'm a crypto enthusiast and an 88 MPH community volunteer. We're excited to have everyone here. We got an exciting call lined up for everyone, so please sit back and relax. Even though the market's dumping, feel free. Just smile, all will be good. Today we have two very special projects joining us. We have Rari Capital and UniWhales DAO. But before we get started, I just wanted to remind everyone to please keep their mics muted unless they're speaking. We're going to go ahead and start with project introductions, then we're going to move on to current updates and news, and then followed by Q&A. Don't forget to ask questions in the Q&A section of the call. The best question voted by the team will win a prize. So to start, I will pass this off to Matt and followed by Jay, and we'll get started with the introductions. Please go ahead.
Okay, my name is Matt Aaron from UniWhales. We started as a side project just tracking Uniswap, and then we expanded more DEXs, just doing on-chain DEX analytics. What separates us from other projects is we realized that there's so much brain fatigue. It's really hard to keep up with everything going on in crypto, and our community became a stronger and stronger part. And we are in the process of gradually, we're kind of a light DAO right now, making a full DAO. So it's a on-chain analytics platform and Telegram alerts powered by an exclusive community. We actually brought on McFly and Zephram for a webinar to, we've had, Maki, Voorhees, Solana team, all sorts of people, interesting people as well in our content. And we're on a mission to lower DeFi brain fatigue.
That's awesome. Thank you so much, Matt. I'm going to switch it over to Jay. If you'd like to introduce yourself as well as the project, please.
Yeah, awesome. Thanks for having me. I'm Jay from Rari Capital. What Rari Capital started as is as a yield aggregator, just like many others, like Yearn. And then we switched into basically using this yield aggregator as a tool to feed other potential products. And our newest product right now is Fuse, which enables anybody to launch their own money market essentially with whatever assets they want, whatever oracles they want, and really whatever they want. So anybody can go and launch their own mini compound and take out leverage, borrow against, and do anything with really any asset.
Beautiful. That's awesome. I know that most of the people here have been on our recent calls, but if anyone from the 88 MPH team wants to just quickly do a small introduction, that'd be great. If not, we can then move on to the next portion of the call.
Can you clarify which kind of introduction you want? Just reminding everyone what's 88 MPH?
Yeah, we've got some people joining us from Rari Capital as well as UniWhales. Just to give them a quick intro, if you want, like a 1 minute.
Yep, sure. So you can think about 88 MPH as the product that is offering fixed interest rates via a bond system. So when you deposit, basically, you are minting a bond that would give you fixed interest rate at maturity. We are offering maturity ranging from 7 days to 365 days on stable coins and cryptos like Link, Bitcoin, different version of Bitcoin, different version of USDC, DAI, Uni. And we are mainly de-risking the world product with floating rate bonds that are representing the debt of the system, and we are selling the debt of the system to someone else. Is the main way of de-risking what we are currently doing. And we are cooking a V3 that we will release in a few days. So it's something pretty excited by what will come in the following weeks.
Awesome. Thanks, McFly. I'm going to bring it back to Matt here for a second. Matt, can you just let our listeners get a sense for what sort of updates are sort of happening with the project? Maybe you want to talk about some of the hurdles or things that you guys have had to deal with in the last couple of months, and some exciting things that are sort of coming within the next couple of months, just to keep our listeners up to date and excited. And then I'll throw it off to Jay to ask the same question.
Great. What are we most excited about? Our new DEX statistics dashboard. We're tracking token outflows across DEXs, meaning take a token like Aave, and are more people buying or selling Aave across SushiSwap, Uniswap version 2, Uniswap v3. The same on Binance Smart Chain, but it's just PancakeSwap. So I think we're collecting all this data, any whale trade on any DEX above 10K, and we're just starting to to tell meaningful stories with it. And so I think a lot of people are using our web app more, not just our community, and getting some good alpha. So I'd say that's the immediate most exciting thing.
That's awesome. That sounds really exciting. Jay, what sort of exciting news do you have to share with some of our listeners today with the project?
Yeah, for sure. Our biggest effort right now is on a new technology called plugins. And essentially what plugins enable is we discovered that realistically in a pool of assets or in a system, in a money market, essentially, only a small percentage of it is actually utilized at any given time. So we said, okay, how can we better utilize this? And that created this system called plugins, whereby basically, let's say you have a money market and it has $10 million in USDC. Only $2 million is being borrowed at any given time. So this new system that we're working on allows that USDC to go and be deployed elsewhere, that idle USDC. So now suddenly the pool will start earning a much, much higher interest rate. And the cool thing is you can apply this to all assets, right? So let's say you have Alchemix in a pool. You can go start staking the remaining Alchemix in a pool. You can do the same with Ohm and Olympus DAO. You can do it with really anything. And how we like to think about it is it'll push us to becoming one of the most capitally efficient lending and borrowing protocols out there.
Thank you for that, Jay. Is there any updates from the 88 MPH team, just like very briefly, or some exciting things that you want to share quickly with everyone listening on the call?
I was thinking we can probably do that at the end of the call, like the last time. Yeah, like just going through with like Rari Capital and UniWhales deeper into their products. And at the end, we will update everyone related to 88 MPH. What do you think?
Yeah, sure. Let's do that. Matt, maybe you can sort of give us like a deep dive for some of our listeners, just a deep dive into the protocol. That'd be awesome. Love to hear more about it.
Yeah, but before I do that, is it okay if I ask Jai a question from Rari Capital?
Yeah, for sure. Go.
Okay, so Jai, I hope I'm pronouncing your name correctly. But so we did a webinar, a community call on Sushi Swap's Bento Box and their isolated lending products, and someone brought up like there are some similarities to Fuse. I was just curious, how is Fuse different from Kashi?
Yeah, I would say there's a few different things. The first is Kashi, and I guess Bento Box is it's built for margin, and it's not really built with any other things in mind. What that means is, yes, you have isolated risk, you have these elastic interest rate curves, but it's not built for anything more than that, and it's optimized around that one use case. Whereas Fuse, it can do so much more. That's why we can do things like plugins, whereas Bento Box really can't do that efficiently. But just zooming out, the big things are you have these pools instead of just having bidirectional pools. What that means is you'll have a lot easier time getting liquidity when trading any assets, which means lower interest rates for the borrowers and ideally higher interest rates for the suppliers. Some other things that we also think about a lot are we aren't working on just adding like random DeFi coins. What we're planning to do is do a lot more of the interesting ones, a lot more ones that talk about composability. So if you look at our Twitter, we just announced the Y Vault tokens as collateral within Fuse. I'm not saying that's something that Kashi and Bento Box wouldn't support, but it doesn't seem likely given their focus on margin. Whereas we're focused on increasing capital efficiency throughout DeFi, and what that means is you're going to be able to use Fuse with really any asset.
Great answer. I appreciate that. But yeah, I guess I'll go back into, I know I kind of answered my question with a question for Rari, but with UniWhales, what's the day-to-day like? I'd say that one of the most interesting things is, integrating Uniswap version 3. I'm still wrapping my head around the liquidity concentration mechanism. I'm sure McFly understands it backwards and forwards and all its impact. And so just, we're tracking all these alerts. Anyone can join our free channels for Uniswap, SushiSwap, and Pancake. But all of a sudden, we're starting to see Uniswap v3 is a legitimate competitor, maybe even a threat to Curve. just the lack of slippage on these, $1 million, $2 million plus swaps. I mean, so I'll bring it up, like obviously, Rari Capital is recovering well. They had an unfortunate incident with the IB Alpha contract. I mean, we saw like our channels light up. So, fortunate and unfortunate events happen when and they're just following the stories in DeFi or obviously yesterday and just all the sell orders and looking at the token outflows to, one thing that I saw is, people seem to trust, even though it's counterintuitive to what I think, people seem to trust Tether more than USDC. So I don't know. So just seeing all the stories through DeFi through just on-chain analytics has been quite interesting, as well as the opinions of, we have a pretty hyper connected, diverse group of people in our DAO, and just seeing their take on things. It's been a lot of fun. So I guess that would be, I hope that answered your question, Whipper.
Yeah, it did. Actually, before we pass it off to Jai to get deep dive, I'm just curious, Matt, what your opinion is on that issue, because it's an issue within the DeFi community. Why do you think there's so much trust behind USDT when people know, like, in the back of their head, there's all these question marks with regards to their backing and stuff like that? Like, what's your take on that?
It's a great question. So here's my take. I think it's seen very different in the Eastern world. We hired someone just to help us out with a smart contract once, and they're like, yeah, just pay us in Tron Tether or Ethereum Tether. So the first thing, there's more Tether on Tron, or there might have been a swap yesterday, but at least for like the last couple months, there's more Tether on Tron than Ethereum. And that's all to say there's just, there's more liquidity. Tether's just the biggest, right? And so I think it's most widely accepted. I've also heard, so I guess my answer would probably be the East. And I've also heard that because I'm from the Western world, is in that between like the China and Russia border, they're using that as like a way to, just like you use Rune to do a cross-chain swap, like BTC to Rune and Rune to ETH, they're using Tether to do like trade between the China and Russia border. So I think there's a lot of edge cases like that going on. That's my take. I mean, and then the fact that it still hasn't failed yet, even though yesterday like it hit like 90 cents and hit $1.10 and Tether put out that tweet. But someone, we had a call yesterday. I think everyone, yeah, I think 88 MPH, I don't know if you guys have Tether staking, and maybe that's by design, but I think everyone can agree here. You have the curve pools with all these assets. I'd be curious to Jai's take, but if Tether goes down, I would think it's going to take 2 years to recover. I mean, I think that's a pretty significant blow if Tether loses its peg. That's just my take, but yeah.
Yeah, thanks for answering that. Jai, maybe you can give us a deep dive, sort of day-to-day operations happening at Rari.
Yeah, really quick, I just want to talk about that a little bit for USDT. I think that the biggest thing for USDT is that it's developed a Lindy. It's been around since the start. It's being accepted and used everywhere. It's at the basis of so many exchanges. And I think that's at its core what promotes its comfort, even if people do have potentially different information goes against what their mental model thinks. As for what I'm working on the day-to-day at Rari, it really changes every single day. We're working on a ton of really, really interesting stuff. So some days it's about designing products on top of layer 2. We're working on this new product that I've been spending a lot of time on called Nova, which basically enables you to access L1 liquidity pools from L2 and basically call any L1 call data directly from L2, specifically Optimism. Some of the other things that I've been working on lately are obviously the hack and how we're going to go about reimbursing the lost funds and like basically leading governance to develop the right path there. And then some of the other things that we've been exploring pretty deeply is what does a Fuse 2.0 look like, and what does a really, really capitally efficient lending and borrowing protocol look like? And that's a conversation we just started this week, super early on, but I hope to have more interesting things to share there soon.
Can I just butt in here? Sorry, hi guys, I'm a bit late. I'd just like to ask both McFly and Jai here. What do you kind of go back to the stablecoins question? What are your thoughts on I don't want to say algorithmic stablecoins, but fractionally algorithmic stablecoins? Such as Phase, such as Frax, these sort of things. Do you see them being something that can actually become fully adopted, fully useful money at some point in the near future, and then obviously being integrated into something like ATMPH, something like Rari Capital?
I do. I think I might be just way too hopeful and optimistic here, but I do. I think that consumers are losing faith in the US government. They're losing faith in the US dollar. They're going to be looking for alternatives. That's why we're seeing all this crazy shit happen across all financial markets. So I think it's only a matter of time before that crazy financial drama makes its way into the US dollar itself and people start looking for ways to opt out. And I think that the United States is perfectly set up and the constituents of the United States are perfectly set up to move this adoption. We don't use cash. We use Venmo. We use Square, like NFC payments. We don't rely on US dollar as much as people think that we do. So I think that it's cooking up the perfect storm for an algorithmic stablecoin to come along. That being said, that's years away. And that's a really, really tough challenge to fight. And I think that it's going to be interesting to see how these algorithmic stablecoins do adopt, specifically in a downtrend market, because most of them haven't had to face through that yet. And I think that a lot of them will break and a lot of their models will break, but the ones who can last, those will be the most interesting.
Yeah, for sure. It's very few algorithmic stablecoins have consistently maintained their peg. If I remember rightly, I think only Frax has done it since its kind of genesis. So yeah, the fair market conditions are basically the stress test for whether or not a lot of these protocols will work. Bill Flight, what do you think about algorithmic stablecoins?
Yeah, like just starting with the peg, like what we witnessed yesterday, we were having a lot of like the mainstream stablecoins losing their peg, like DAI, FEI, USDT, like all of them were out of their peg. So I'm like the fractional stablecoin things. I think it's an interesting experiment. But if we really want to like get something else than just like USD based stable coins, I'm really eager to find a solution or like find a product where like is not pegged just with the dollar, like something more universal or like something that is using another model of like money layers. Like we are basing everything on the dollar currently. It will be awesome to have like something that is looking more like a basket of fiat currencies or like something else than just fiat currencies. Like there is some experiments with Bitcoin, there is some experiments with gold. So like a mix of that and like kind of going away of the current model where everything is basically based on the USDC, but like everyone will be wrecked because if like 2022, 2023 will be like with a lot of inflations, what we are doing with these stable coins, even if they are like at pegs, it's not like really practical money right now where to store your like some value. So it's just like a medium of exchange right now, but like I would love to see more solutions that are like a bit more anti-fragile or like resilient to different things.
Yeah, it's the toss up of collateralization. You need collateralization in order to be legitimate, but also capital efficiency. All that cash sat around is doing nothing if it's used as collateral without being reinvested. However, although collateral is supposed, the typical stable coins are supposed to be fully collateralized. There was a story that Tether is only 2.9% cash, which is crazy.
Yeah, and like the thing that will be really interesting is having like more solutions for European users. There is like some stuff that are like currently exploring like stable coins for euro, for yen, yuan.
Yes,
But
the
like
Senior shares who ATMPH were working with at one point, they released that. Unfortunately, their team decided to give up very soon afterwards, but they did release a digital yen or a algorithmic stable yen, which was interesting.
Yep.
Yeah, this is a great topic, actually. It's one that I think a lot about, more so around the fact that a lot of these stablecoins are just centralized, and in theory, even though maybe not likely, can sort of be turned off or blacklisted at any point. And I'm not really sure people are really fully understanding the risk that's involved and what's associated with those types of events that are happening. I was a little bit upset myself to see that DAI, was eventually being backed by USDC. I really liked DAI before that personally. It felt more of like a decentralized stablecoin. But yeah, Josh, I'm really happy you brought that up. It's such an important point, and I don't think it's talked enough within the industry.
Yeah, for sure. And I think it's going to be the biggest narrative of the next couple of years is stable coins, really, because as Jai said, so many people are disillusioned with the US dollar and just the general financial system as it is. Inflation all over the world is going through the roof, and it has really only just begun in the US, to 4% in the last month when there was expected to be none. So you can imagine the coming months and years are going to be pretty intense. So yeah, an on-chain variant of a stablecoin, yeah, that once someone gets that down, that's going to be a really important narrative for the next few years.
For one, I trust DAI a lot more than I trust Tether, and I'm not sure if part of that is the narrative around DeFi. And if I was going to trust an algorithmic stablecoin, I would pick DAI among the options currently. But maybe that is just because of MakerDAO and my bias towards them and some of the shady. Not sure if shady is the right word, or rather unknown background of Tether and some of the debate. But I'm in much more support of DAI if I had to pick.
Again, that speaks to what Jai said about the Lindy effect, right?
Yeah.
So MakerDAO has been around for so long.
Oh, yeah.
And that's another thing is that something like MPH, ATMH, something like Rari Capital, these are very new protocols, right? So I've asked McFly this a bunch of times, so I might actually ask Jai. So Jai, as the bear market comes and whatnot, and the future comes, what kind of benefits do you see for time in the market for Rari Capital?
What do you mean by that?
So I mean, as in, so obviously being in the market for a long time is good because you can gain more users and things like that. But is there any particular benefits that you can see Rari Capital gaining by having a longer time of operations apart from just like a larger user base? Is there some kind of like cumulative effect that will work well with the protocol by having more more deposits and this kind of thing?
Yeah, 100%. So the way that I like to think about it is all of our products are a really strong flywheel. So as the Fuse product is used more, it generates higher interest rates, which then pushes up the interest rates of the yield aggregator, which then will push up the interest rates of of our various other products that will rely on the yield aggregator. So I think that the big thing is, as time passes, as trust increases throughout our products and on the protocol holistically, then you'll see a lot more TVL flow in, whether it's DeFi assets themselves or these other composable assets like Y vaults. And with that, you'll see trust, higher interest rates, and realistically, just the explosion and growth of the protocol itself. And that's what I'm most excited for. Is in this bear market, we've set up our products that they thrive in both a bull and bear market. People want to go and earn yield on their dollars and on their cryptos, whether the market conditions are up or down, because we're going to make the yield that good. Obviously, you do have this antithesis that the interest rates will be higher during a bull market because everybody wants to lever up on their crypto assets. So now it's about, okay, how do you make the use cases behind Fuse so strong that people are borrowing and using the product without just taking out price leverage on Ethereum? And that's what we talk about every single day, is how do we best do that? How do we best deliver value to all of our users of each of our products?
Yeah, I think that should be the core of most developers' conversations, right? It's how do we continually drive value back to the users? McFly, what about yourself? What do you apart from maybe just like I've asked you a couple of times because I think it's really important and I think it's super bullish about lasting through the bear market. But what kind of cumulative benefits can you see with MPH being in the market for a long time?
If I understand correctly, the question is we are like it's the 7th. Yeah, we are in the month 7 of our launch since like November 2020. we launched at the time where like the market was like basically going up, up, up. We are like probably going into a new cycle or like a new phase, even if it's not the end of the bull market, in my opinion. We still have room for growing, and we need to zoom out to see like the big picture since last year or since 2019. And like what we are currently doing with Zephram related to the design of the V3 is making sure that we are designing something that will work even if there is blood in the streets. That means that the main thing we need to take care of is staying solvent, even if like the market rate will be probably lower or probably like at some level that we are currently not considering. So we need to be sure that we stay solvent, but we can handle like any potential bank run, if we can name them like that. So for this reason, we are like updating with the V3 certain components of our design. And we have a pretty solid foundation for like going through any condition in the market after that, even if there is trade-off, of course, or like you need to trade maybe some more security for flexibility or performances. But yeah, it's like finding the right mix will need more iteration for sure, but like we are heading in the good direction, I think, with V3 with that, mainly with like a better model for the floating rate bonds, like a better model like for the interest rate we are offering, like the way we are dealing with the surplus in each pool or the deficit in each pools also. So yeah, it's kind of like really important to take care of that when you are still in a bull market and making sure that everything will roll out smoothly in a
Whilst
bear
the
market.
food is plenty, eat
Yeah,
out
I
fast.
mean, also I'd probably add in that the like any DeFi project is so new. It wasn't even really around a year ago. It was trying to survive through a bear market. I mean, most of these protocols are just not going to be here a couple
Yeah.
years from now. So we're all in survival mode.
I think it's important to note too that last bear market that I was in. Sorry if it's hard to understand me. By the way, I have pneumonia, so I'm hanging in here. Last bear market I was in, there wasn't a whole lot of actual infrastructure set up. As I'm sure most of you noticed, it was 99% speculation, and today we actually have a lot more products. We have a lot of products where remaining solvent, especially in MPH's case, is crucial. And I'm very eager to see how not just MPH, but a lot of other projects handle a bear market. Not that we're going into one necessarily, but how once we're in one, what is going to survive and what's not going to survive. And I, for one, know that when I choose to park my stablecoin somewhere, I'm going to pick a project where solvency and security are the top priority. And that's one of the things I love about MPH and love about what everyone here is doing is that security is at the forefront of everybody's mind, above what we want our community to think at this moment and the expectations. We've always put audits and security first. And that's crucial in a bear market because I think a lot of people are going to realize so many of their favorite projects are just going to fall off the map, unfortunately, that don't get this right. And I think that's important to note. And I think that similar to what you were saying about time in the market, Josh, and I liked your answer, Jai, if I said that right, is something I wanted to add specifically with Rari Capital is some of the silver lining with a lot of these exploits. I believe if it was, what was it, 10, 15 million? I've heard a couple different numbers. Being able to survive through that as a protocol and being able to come out on the other side is something that really strengthens the trust in a project. And that's pretty much the exact reason why I trust DAI. So it's really interesting that you brought that up. I trust MakerDAO given its exploit and given how it handled it and where DAI is today. I think that equates a lot to TVL and a lot to the trust in a project. Not that I think a project should go through an exploit, but how it handles it. So yeah, I just wanted to add that onto your point.
Yeah, I completely agree. I think I've been associated with a couple of projects and some of them have been hacked, and it is just it's a long long slow road up, but it's like you say, it's how you handle it that defines a project. And I think unfortunately Jai at Rari was it is what it is. I didn't like to see the thing that obviously no one likes to see a hack and no one likes to see that, but what I particularly didn't like to see was there was some kind, it seemed to me like there was some kind of shift of blame from the other parties involved, and it was like it felt a little bit like you guys were being scapegoated or kind of left out in the cold. So yeah, I'm just super excited to see how you guys, how the market kind of brings their faith back towards you and the guys at Rari Capital.
Yeah, for sure. I really appreciate that, you guys. It definitely was a pretty difficult situation. I mean, waking up to like 20 phone calls saying that $11 million was gone, pretty tough. But at its core, I think that we've done a pretty decent job at doing exactly what you guys just said in terms of like turning the ship around. And I mean, in our Discord now, the community is joking around this idea of bullish hacking. They're making merch around this idea of bullish hacking and t-shirts that say bullish hacking, which I think is really funny because at its core, this hack really did bring our community together and made us a lot stronger for it. And like, instead of worrying about whether like we'll survive, I think that like we've really taken the opportunity to actually thrive during this time.
Yeah, and another thing I'd say too about a lot of this is culture is incredibly important. You look at Aave, Synthetics, they had to change names. Same with Ren, right? You have 4 or 5 people on some of these teams, and they've gotten wealthy. All of a sudden, they're in a bear market. It happens really slow, then it happens really fast when you return to the bull market. But just keeping people together, keep people motivated. I mean, even for teams right now, with a lot of people getting instantly wealthy, it's hard to keep that culture. And I think that's one thing that's not talked about enough in terms of quote unquote survival or thriving in a multi-year project.
Yeah, one thing I wanted to add also is probably the majority of the protocol that are currently existing, like the main protocol we are using on a daily basis on mainnet, they all had at least one exploit in their lifetime. Some were like a bit better than others. Some were like a bit more like complex or like simpler or like just dumb, stupid stuff that happen, and it will happen to every possible team, even the kind of like Twitter crypto stars or stuff like that, where like everyone thinks they are like smarter than everyone else. There will be an exploit with them also. So it's a question of like learning from that and not like being afraid of it, because like it will happen and it will happen again. But making sure that we learn something from it, and like, yeah, just trying to have better process internally, maybe better safeguards or like layers of insurance around it, like seeing de-risking with like an onion of different layers that can like handle the risk if something is exploited, trying to, yeah, draw perimeters around that and making sure that it can't be worse than it already is. And yeah, just is not the end of the world. Like it's bad, but like if you can continue, if the product can continue from here, is always like, I'm not telling about like a rug pull or stuff like that, but the exploit is yeah, part of the game, I think.
Yeah, 100% McFly. What doesn't kill you makes you stronger, and resilience is at the center stage of DeFi in itself. So absolutely, I agree. Before we head over to some Q&A, were there any updates or anything that MPH wanted to announce?
we have a bunch of things to announce, but I wouldn't like to waste the time of Jay or Matt, like talking about like pure specific things from 88 MPH. I would prefer to handle first the Q&A with them, with Jay and Matt, and after like ending the call with the update with progress related to V3 or stuff like audits or other topics I wanted to bring.
Yeah, totally. Sounds smart. So we'll open it up to the audience. Just raise your hand if you have a question that you want to put forward. And just a reminder that we will be awarding the best question with $100 worth of MPH token. So get your best questions and get them through. We will also be accepting questions through our Discord and Telegram as well. So feel free. Open it up.
So I think
The-
there was a question about the zero coupon bonds. It was answered in chat, but I think it's a good one. So I think we can answer that. It says, how are you calculating the implied rate of the zero coupon bonds? This is actually something that took myself a long time to figure out, many hours figuring it out. How does one work out the implied rate of the zero coupon bond?
Yeah, that kind of like I just wanted to go through the questions related to Rari
Oh, sorry.
Capital or
Sorry, you did
UniWhale
say that.
first, and after we can go for the questions related to 88 MPH. But I have one for Jay, like related to what we are currently building with the V3 and what's currently happening with Fuse. There is MPH listed there with like in the pool 3 of Fuse. There is a bunch of activity there, like there is a bunch of MPH supplied and used there. I'm wondering your strategy to onboard other protocol to use the Fuse pools. You were like mentioning a few minutes ago, like the strategy related to plugins. How do you see the next step for us, like the collaboration between Rari Capital and 88 MPH? Like, what's your vision related to that? Like, how can 88 MPH leverage what you are currently doing at Fuse and the next step for Rari Capital in terms of product stuff that can be used by 88 MPH?
Yeah, for sure. Great question. I think that there are a couple different things that initially come to mind. Honestly, like my view is that anybody can list the MPH asset, right? Like I don't think that that's too interesting in itself. So becomes okay, what is interesting? And to me, I think that's what if you're able to borrow and lend against these zero coupon bonds? What if you're able to lend against the entire asset universe of MPH? And I mean, that's the vision that we're working towards. So realistically, if you guys were to go build your own, say, money market, you would need to worry about liquidity for US dollars to be able to borrow against. You need to worry about all these other things. But we have the yield aggregator, which can seed you guys with liquidity. So, I mean, what we're working on now is developing a model that can work with assets that expire and assets with a fixed maturity date. So what that means is that you can really and easily roll assets in and out of a Fuse pool for people to easily borrow and lend against. And I think that's really interesting because from an entire like capital efficiency point of view, being able to do something like this, being able to lever up on these assets, being able to do a bunch of really interesting shit with them, that's what really excites me.
Yeah, that sounds really promising. I'm wondering, like, maybe the main constraints will be to pull a price, to pull like, how you will do that, like related to oracles, to pull maturity or price, like what's the plan with that?
Yeah, that's a great question. I would need to go deeper in to figure out how we can structure it because to date, each asset that we add within Fuse has two different options for how we quote unquote unwrap it. The first is we go and sell it on a secondary market like Uniswap or something. And then the second is we go and redeem it for the principal. So in the Urn Vault, we can go and withdraw the underlying of the Urn Vault, go and take that out, liquidate the underlying. So I would need to figure out the best mechanism to be able to do that, and then we can figure out a pricing model from there. What may become a constraint is if there is no underlying principal that can be instantly redeemed. And in that case, then what we'll need to explore is how do we basically create a secondary market for this, and how do we make sure that liquidators are comfortable taking this out?
Yeah, talking about liquidators, if I understand correctly, you're trying to build a network of liquidators. Like, what do you think of like what's currently happening with B protocol, for example? Is there a way to partner with them to kind of attract a better network of liquidators?
Yeah, liquidators are a really, really interesting problem. What we are currently working on, and I guess not even working on, just ideating around, and honestly, I haven't gone too deep into B protocol, is what does it look like for us to basically monetize off of the MEV that users are currently doing in terms of these liquidations? Because liquidators are making a killing. So what would it look like if basically we give them an NFT or something which can basically register their ability to go and conduct these liquidations? So then suddenly that MEV is going to the protocol instead of to the liquidator. So there you face a challenge of how do you maintain a healthy market, and that's something that we're discovering. Realistically, this mechanism was developed for what we're working on layer 2, and we're seeing how we can potentially bring it to our layer 1 liquidations to really make money off of this MEV instead of having it just be extracting value from the users.
Yeah. Yeah, that makes sense. It's really like I think one of the big challenges in the following months, and I think like I like what's currently doing B protocol. Like there is like a bunch of interesting idea there. We'll see how it develops, but it was like really useful, and I wasn't like online yesterday and today, but I need to update myself with the current events and see all the liquidation were done on some networks related to like the crazy amount of money that was liquidated yesterday, to see all like some backstop protocol like B protocol were doing. But yeah, like I'm another question for maybe you, Matt, with what you were like tracking yesterday with UniWhales. Did you spotted some interesting insights related to the current events, like related to yeah, the market, or like what you are currently tracking, the main metrics? Like, did you learn something with in the last hours?
Well, in my opinion, the crash was just so fast and it had a lot to do with like leverage things on centralized exchanges. I can see that we saw clearly just checking outflows, just from our select wallets, kind of our top traders wallets list, that the ETH WBTC ratio, we saw that pretty clearly in the stats. But honestly, more, it was kind of the social reaction to news. That was probably the most interesting. That's not even on chain. I also thought I'd add, because both of you guys brought up some interesting points about the US dollar, and I hope you guys are right, but in my opinion, like as someone who agrees with you ideologically, I think that there is some inflation for the US dollar, but they printed 20% in a year. The reason why it's not incredibly crazy inflation is because the US dollar as the world's reserve is the best bet. It's not great, but it's the best bet, and it causes a ton of pain in other countries because they use the US dollar for trade. But to think that like a stable coin in a couple years, to me seems like it'll be really difficult, and also that the US dollar is, I mean, all these stable coins are based on the US dollar. So it would have to be, if the US dollar implodes, then it would have to be a coin implied on a different type of peg. So just my thoughts there, I thought I'd share to give you maybe a little bit more bearish case and cynical, but just seeing how powerful the dollar is, I just think it would be pretty hard to usurp in the next 5 to 10 years.
And if it ever did collapse, we have much bigger issues to worry about than where are we going to derive value from. I've thought about that too. You don't have a U.S. dollar. How do you dictate value without a reserve currency? And without a reserve currency, where do you get value is kind of a catch-22. And there's going to be a lot bigger things to focus on whenever it collapses. So
Yeah, definitely. We have questions from maybe like I don't want to interfere with you, Whipper, related to the questions that we are spotting on Telegram, but I saw one who was like really interesting from OX Underground. The one with like small teams, like how do you basically deal with one developer or two or three developers leaving the team because of like some events, how to deal with that, like when like is there any plans to deal with that for a protocol according to you guys, when like the team split, for example, and there was like a ton of example with that. How do you ensure the longevity, the sustainability of a protocol like a Rari Capital or a project like UniWhales, where like the team split? Like, is there like a plan for that, for handling the longevity of your projects?
It's funny you bring that up. Hope you don't mind me answering first here. That's a great question. So people are talking about, oh, look at Pickle. They have 4-year lockups. They lost 2 of their top 3 devs, right? And I'm not criticizing Pickle, by the way, but people are like, you can. Someone's like, I'm gonna take 1% of my portfolio and kind of lock up in their V curve style lockups. So to me, the biggest risk there is the human risk. Are they going to be able to stay together with one of the 3 original founders for 4 years? That is such a long time. Think about where you were 4 years ago. So when it comes to culture, one is I think we have to be a lot more flexible. I see people very focused on raising money for their projects, and they do need capital, but thinking that it can be traditional, I'm going to get these like full-time devs. We've been a lot more flexible with members of our DAO, hiring them on part-time, and this gig economy, especially in the bull market, assuming we continue in this bull market, because we're entering this gig economy. So being a lot more flexible for people, and then taking chances on more junior people and thinking that they might stick around a bit longer. Those are the things that are most important. And so we, are one of our top devs, they made a lot of money, right? And they don't want to code anymore, but just keeping them on as an advisor, connected, things like that. So I try to still, if they're really quality people, I still try to keep them involved with the project, even if they're not going to be building anything for us directly.
What do you think, Jay?
Yeah, I think that the big thing for us is really leaning into this DAO mentality. This is exactly what DAOs were built and designed for, in terms of not placing all of the risk, not placing all of the dependencies on one or a few individuals, but really empowering the many. So it becomes, I think that the question becomes, how do you develop the most sustainable DAO that doesn't rely on any centralized bodies? And I think for us, that's still an ongoing challenge. For example, our documentation isn't too good right now, especially for some of the newer products, because we're just moving so fast in how we try and ship. So I think at the end of the day, my answer would be that we're focusing on the DAO as a way to minimize these issues. And we're also focused on incentive alignment between all members of the DAO to make sure that they are not only like they should love where they're working, but they should also be financially motivated to stay with us.
Jai, I had a question. At the beginning of the call, in the update section, you mentioned something with regards to pulling liquidity from L1 and migrating it to L2 or vice versa. I was really curious about that. Yeah, I was wondering if you could just briefly expand a little bit on that. It sounded really, really awesome and exciting.
Yeah, for sure. So we're working on a product called Nova, and I don't think we've talked much about this too much in public, but essentially what it is on certain L2s, the biggest one that we're working with is Optimism. You have a 7-day withdrawal window. This withdrawal window sucks. So people started to see that, and you have solutions like what Maker just put out to escape the 7-day withdrawal period by basically minting DAI on the other side. What we said is that's not enough. Just getting DAI on one side of the on one side of the layers doesn't make any sense. So we said we want to be able to access all of layer 1, all of the liquidity on layer 1. We want to access everything on layer 1 from layer 2. So we just got a uni grants for this, and what we're building out is essentially you can pay on layer 2 to call any call data from layer 2, and it'll instantly happen on layer 1. So in practice, what does that mean? That means that you can go and make a Uniswap trade with Uniswap liquidity on layer 1 from Optimism on layer 2, get that liquidity, pay back the market maker, and you don't have to worry about 7-day withdrawals of sending or beaming assets down from layer 2 to layer 1 or anything. And the cool thing about this is it can be done with anything. If you guys wanted to be able to support transactions from layer 2 into 88 MPH, instead of having to go and redeploy directly onto Optimism to be able to support everybody there, you guys can just build out an adapter for Nova, which takes all of 20 minutes, and be able to serve all of those users who already have their liquidity over there.
Wow. That sounds like super revolutionary. I'm definitely going to follow the developments behind that. Thank you.
Yeah, for sure. And it's pretty exciting. We're actually sending the first half of the code base to Audit with Open Zeppelin next week. So I'm really excited about this, but we're just sitting on our hands till Optimism launches, but we're all really excited about it.
Are there any other questions from the audience? Anyone have anything they want to ask some of the projects here?
I think there was a good question in Telegram. I just saw it now. Let me get it up. There was one. It said here the recent the recent volatility just over the past few days. It says here, how do you guys assess the stability of your protocol during this time of huge volatility? Does that kind of minus 35% drop give a good stress test for the protocol's security and the protocol's longevity? So I'm going to open that up to Jai, if you don't mind.
Yeah, quite frankly, yes. We run a money market, and we've seen in the past many issues with money markets being able to suffer a flash crash like that's happened over the past couple of days. And we were concerned about our liquidators. But the amazing thing is all of them worked perfectly as functioned. We run our own liquidators internally just to make sure that the markets can sustain healthy, almost as a liquidator of last resort. But what we saw instead was a diverse set of liquidators come and liquidate all the unhealthy positions within Fuse and make the markets healthy, which was really like exciting to me because I didn't know we had such a robust liquidator ecosystem really, but these liquidators made an absolute killing, and I mean I'm really excited to see that happen.
Yeah, the over leveraging of the market is absolutely a bit of it. I don't want to say it, but like a bit of a cancer on the scene at the moment, because it is creating kind of expectations and also in making the market unhealthy. The expectations of people who can get a 125x leverage and then do such crazy things with that. I think that skews the idea of value in the market, and I think it's something that the less the less extreme, the better. What about yourself, McFly? How did 88 MPH, the internal systems, how did that react during the volatility?
Like by our designs, we have not a lot of impacts in the sense that we are not a money market, so we don't need to handle any ratio or stuff like that to continue dealing with our usual business. I suppose it will be a question that will matter if we are using our bonds or other stuff we are building as a collateral for doing something else, but it's really far away for now. And probably a better idea is to use a protocol like Rari Capital to offer these kind of things. But we don't care much about price. is not something that impact the business. Like it's impacting the community, it's impacting like at a psychological level, maybe motivations to continue building things. Is not like really something we care about because we are building together with the firm since 4 years, and like we go for a lot of different context of markets and situations, and like bad shit happen every day. So we are like kind of ready for these kind of things. So correct me if I'm wrong, Zephram, but it's not like really something that matter for us.
Yeah, for sure.
And yeah, I'm curious, like maybe in your community, Matt, like maybe a lot of your community was kind of like the kind of decision guys who are like leveraging everything in their portfolio until they can't anymore. Or is it like something more like mature where like guys were like dealing with the situation more comfortably? Or like what was the mood yesterday in your community?
I think it was pretty relaxed. A lot of more veteran investors, traders, and devs. I know someone like close to the DAO got like liquidated $1 million, but some of these people in our DAO. And by the way, shameless plug, but I guess I'm on the community call here. We're token gated, right? Which so you can buy 5,000 WL right on Uniswap V2 right now. Check out our community, see if it's for you. If not, you can just sell the tokens. Having said that, I think that people are pretty mature and they're kind of in it for the long term. I think there's a lot of discussion around the news, the interpretation of the news, and the fear that if we're entering into the bear market, right, like the yields are going to be different, and just there is a little thought of, okay, I need to mentally prepare for that if the bear market really began yesterday, which I still don't think it has, but that's just my personal opinion. I could be wrong.
Yeah. No, yeah, I was reading some stuff like some guys were like kind of liquidated out. Like I heard that like there was $8.8 billion worth of liquidation yesterday. I don't know if it was like considering the whole ecosystem or just like the Bitcoin ecosystem or stuff like on centralized exchange. But it was like kind of crazy numbers. And yeah, like really interesting to see how people react to that. But I think in our community, and maybe I'm wrong, and maybe Josh or Steven, you have a better understanding of what was the current mood or the yesterday mood in our community.
Um,
But I
so,
think it's go ahead.
something I like about our community is we've seemed to weather through periods like this stronger than any other, especially Telegram community. You know, you go to a lot of price channels or even the main channels, and when there's dumps, you'll see people bickering, people fighting, people, you know, just all the toxic behavior you see on social media, especially in this space. And you know, I was shocked. I haven't actually really checked my prices. Normally when stuff like this happens, I'll kind of mentally unplug and I'll step away a little bit from checking my portfolio. But I pulled it up a second ago and I was like, wow, MPH is $80, and I would have had no idea by scrolling through our Telegram. And I think that's a true testament to how, you know, whether you want to call it diamond hands or positive or a bunch of investors that see the potential in what we're building and what everyone here is doing. But yeah, that's something I've always loved about MPH. Long before I was on board the team, long before I did anything for you guys originally, is I was drawn to the positivity and the security in this group. And yeah, so I enjoy how we're handling it. And I personally, since I've been pretty sick this week and I'm just now starting to feel better, it was sort of a blessing in disguise because I wasn't really able to check prices, you know, watch videos, kind of absorb myself in all the chaos going on. So I sort of didn't really affect me at all. But I'll usually check all my vaults because I have a few vaults on different platforms, and I'll check my maker vault usually once a day just to check the price, see how I'm collateralized. And yesterday, or 2 days ago, I didn't check it, and I randomly decided to pull it up when I realized Bitcoin had dumped so much, and I was $1,000 from having a large percentage of my Bitcoin portfolio liquidated. And I quickly jumped on it, moved funds around, funded it back up. But it was funny you guys were mentioning liquidations because that was the first time this entire market cycle that I actually felt some panic. Was realizing, oh, Bitcoin will never get down to 30 grand, never going to happen for at least a few more months. And it caught me off guard for certain. So it opened my eyes up to not kind of overexpose myself to some of the lending and borrowing that I do in DeFi. But
I think the dump of the last weekend has just gone to show that there is really no one that can predict what's happening in the market. Someone can predict it, and one person will get lucky. I've seen a couple of very, very skilled traders on crypto Twitter who are doing great jobs, and they've a couple months in advance they've drawn these lines that turn up. But there are just so many things that happen, and a flash crash is largely manipulated or feels largely manipulated, and it's designed to get rid of that high leverage trading. But back to McFly's kind of point, I do think that projects such as AT&MPH, projects such as Rari Capital, ones that aren't intrinsically there to make token holders quickly rich, that's not really what the aim of the game is for these projects. It's to build a structured product to make it work, to make it secure, and make it a long-term thing. And the people that invest in these, really invest, not just like turn up for one bit and then leave for next. People who invest in these kind of projects, I think they see past the current price action, and I think that's the kind of community that personally I think we should be building at AT&MPH, and we're doing a fantastic job of it, because as Stephen said, you would never know that we were going through a minus 40% dump in a day if you were just chilling in the AT&MPH Telegram or Discord, because the people are just interested in other things. Or you might find out, but it would only be just pure chat. There's no FUD. And I think that's down to the kind of the quality of the protocols in which all of you guys are building here in Rari Capital and AT&MPH and UniWhales.
And some of that,
I'll
I
say
think,
one
comes
thing.
with,
Oh, sorry. Go ahead, Stephen. Go ahead.
I think some of that comes with the type of project it is as well. MPH is not, it would be different if we were some kind of, meme coin or, an Oracle or like I don't want to say blue chip, but something a bit more easy to understand. You attract a lot of the normal beginner, it's their first kind of dive into this space where they either buy, XRP or ETH or just something that's a little bit easier to grasp. I think when you have projects like this that require layers of maybe experience or a little more intellectual understanding, you tend to attract a lot of investors that are more level-headed with fluctuations in the market. And I think that has a lot to do with it. I wouldn't really expect someone first jumping into cryptocurrency to read through MPH and be, I totally understand how this financial game works. So yeah.
It creates an
Same goes
interesting
with
space.
Rari. Definitely same thing goes with Rari as well.
For sure. Yeah, I think it creates an interesting space actually. Because like you said, your first time crypto guys are more likely not going to come and pick up, Rari or AT&MPH. But it does present an opportunity for those who are trained in traditional finance, CeFi guys, TradFi boomers, the suits, whatever. It presents an opportunity for them to come in and to kind of think, oh, I know about this stuff. I know money markets, I know fixed lending. Let's play around with this decentralized stuff. And then, of course, those kind of guys have historically got lots of capital to throw around. So it's quite an exciting project to be a part of. When the boomers come, you would think that they'd come to projects such as AT&MPH, such as Rari Capital.
Absolutely. Things that bridge that traditional finance into DeFi. Obviously, that's what we kind of see DeFi is, but those direct links, you got bonds, all the derivatives, all the different markets, indices, everything that has a massive place in the traditional space, I think is something that is going to shine in DeFi eventually, because that's what's actually going to adopt the big money bags in the traditional space.
Yep, guys. If you don't mind, guys, I see that we are kind of running out of time, and I wanted to end the call with some updates related to our progress with V3. Before going into that, I just wanted to ask Matt and Jay, do you want to add anything like related to what we were discussing, or related to like the future roadmap of your protocol or product? Like, is there anything you want to announce before we switch to our progress with RV3?
Yeah, I'll just go real quick. Thanks, Jay. I enjoyed hearing about ADA-MPH Rari and being part of your community today. I think you've made us think a lot more. I mean, we are building out a full-on DAO, but we look at gradual decentralization because we look at the social and human aspect as underrated in its difficulty and complexity for building out for the long term. But I would encourage anyone that's looking for, alpha for a community, check out our token gated DAO. It's quite experimental, and we have some cutting edge things coming out on Polygon. Thanks so much for having me today, McFly and Zephram and the total 88 MPH community. I actually have to run to the airport. So, and thanks again, Jai, for speaking on Rari, which is such an interesting project.
Yeah, don't hesitate, Matt, before like going to the airport, to drop the links to your socials channel. If you have a Discord or Telegram, post it directly in the general, like that we can join also and connect directly with your community.
And I want to mention, we are recording this, so Matt, Jai, Rari, if you guys want the recording to be able to send to your community, if you want the links, we'll make sure to get those up after this.
Yep, cool. How about you, Jay? Anything you want to announce?
Yeah, no, I think we covered most of it in the call. I just wanted to say thank you guys for having me. And I've had a lot of fun.
Awesome. So don't hesitate to also post the different links for joining the Rari Capital community. And we will share with you the community records also. So if you don't mind, I will go for the progress with V3. So different bunch of things. There is the security audits reports that I wanted to share with you guys. We just got the final report from PeckShield. So I will directly drop that in our general channel. So that's the final report. That means that everything that was mentioned there was acknowledged or fixed. And there wasn't like a match, like there wasn't like critical issue. There was one high severity issue, if I don't say something wrong. I will share it with you, and maybe Zephram, if you can go through in 2 minutes, like just presenting basically the main findings, it would be awesome. Like just not going in the details, technical details, but just like going for like the main information that we need to communicate with our community. I'm posting it directly into the general for your information.
I'll put that in our Telegram too for everyone asking.
Yep.
Yep. Let me just open up the audit report real.
Yep.
Yeah. So like the one major issue that the audit report uncovered is it's kind of silly, I guess. Like it's a typo, but like it's also like core to the logic of the new floating rate bonds contract, specifically to like the dividend distribution for the token holders. I don't think that particular part actually affects like how we use the token, but like it's just kind of a silly bug that's been yeah, it's definitely been fixed. The other things in the report are just kind of suggestions, I think, for like a few things that we missed.
And for anyone that hasn't read an audit report before, they do like to put things in at the end, just suggestions, just to make it seem, they get paid for their work, right? So they want to write some things in like, hey, we've been looking at your code, and this is what we think, even if it's not actually useful to the final product.
Awesome, awesome. McFly, was there anything else, or Zephram?
So yeah, like just finishing with the topics of security audits, there was the C4 bounty. C4 is a community of auditors for everyone to, just like for putting everyone at the same level of information. There is a bunch of issues that were posted into a private repo where the V3 smart contract code was hosted by the C4 community. So we acknowledged them. Maybe Zephram, you have like better information than me related to the issue that was that were raised in that repo. You told me like there wasn't any major things there.
Yeah, so most of the issue uncovered were like typos like in the error message or like just some common sense stuff. There are like issues raised about the income index, which I won't get into, but like it's just how we track how much interest we have earned from the underlying yield protocol. So I'll take a deeper look at those for sure, but as for the others, they're just really nothing more than like typos and stuff.
Mm-hmm. Yep. So
And even that dividend accounting that we're talking about, I'm not even sure if you can even consider that a high severity in terms of security to anyone wondering how some of these audits work. You might look at the severity and think, oh, that means everything's doomed if there's a finding high or medium. That's not exactly what that means.
Yeah, and more about that, like the issue with the like the high severity issue was in like the burn function of the floating rate bond token, and it like ADMPH doesn't really like burn floating rate bond tokens like anywhere, so like it's just like it wouldn't have like caused any issues if it wasn't discovered, I mean.
Yep. And so the next step related to audits will be to probably, I need to discuss with the C4 community leads that are handling our case with the current bounty, or we will publish the reports for the C4 findings. I will probably have more news in some days, like probably early next week. We will communicate on that for the C4 findings and the fixes, of course, with all of that if any needed. And the PEC shield, I just received it today, so I will publish it. I will communicate more on that probably today on Twitter and on Telegram. And yeah, I think after that, it's mainly like our progress with V3 is mainly about the subgraph, plugging everything with the front end. So Zephram is working on the subgraph right now. Me, I'm working on updating the UI to have like something that is simpler to use, like kind of ditch away the it's like not a, I'm not sure if it's the right word, but like the look and feel we can have currently is more about like a Bloomberg terminal than something that is a mainstream app. So we want to bring more simplicity into all of that without like.
Are we still going to see the dope color scheme and aesthetics, the Back to the Future
Yeah.
aesthetics?
So yeah, it's nice you're asking that. I'm laughing because I saw today a discussion on Twitter. There was a guy who was like mentioning us, saying that we are like kind of having the wrong marketing because we are targeting this product, 88 MPH product, like the fixed interest rates, is targeting normies, and we are like having a marketing that is looking like more a degen product. So we are like kind of not writing, like not connecting correctly the marketing with what we are currently offering. And I was like thinking more about, like, there was Molly answering him, a bit harsh, but like it was like a funny answer also. And I was thinking more about that. And like the current state of mainnet on Ethereum is like no normies will use 88 MPH currently, or any other product that is asking $500 worth of fee for transacting into the app or doing any action that need a transaction. So we probably going to adapt the UI and the UX according to where we are building 88 MPH. We were having a discussion yesterday with a VC, and it was like we were having this discussion related to that. Like, for example, let's say we are going to build 88 MPH on Polygon. Probably on Polygon, we will need to have something that is more looking like a Web2 app, like with a fancy design and stuff that look like Coinbase or stuff like that. Because you will find more normies and people that are used to deal with this kind of app. Rather than it's not like an obligation to do that currently on Ethereum mainnet. Even if, like, I'm not telling we won't do that, but it's like more a question where you are currently building, and it's kind of like an iOS app is not looking like an Android app, or like I think an Ethereum app won't look like a Polygon app or a Binance app or a Phantom app. I don't know, like maybe I'm wrong, but we will see.
No,
And
I
we
do
will
think
adapt.
I do see your point, and I mean, when you said change for your chain, I could imagine just like a bluer color scale if you were on Polygon or whatnot. But I do kind of agree. Like, for example, you know, if you're on Solana, for example, you'd expect there to be kind of more clear cut black lines and this kind of thing. I do think though that the comment that person made about ATMPH's aesthetic, I think they're not appreciating the fact that adapt. You know, people are going to have to adapt, and I think things are really changing in terms of not just products, not just, you know, the ecosystem, but also, you know, the aesthetic, also the production value. So I do think that taste will change, and I think you can be a leader, you know, a thought leader in the avant-garde, you know, if we're using French.
Yeah, I don't know, but I don't think like there is a like anything wrong by updating, and it's like a normal evolution of any product to adapt with the evolution of a community. I think it wasn't an issue when we started because like we were mainly like a small niche, and like people hearing about us were like not being afraid of it, and like there is two school, like people who like and people who dislike, and I think it will be also two school when we will update the design for V3. There will be like people who like what we are doing and people who don't like. So I think I don't like, it doesn't matter at the end, the UI or like the look and feel is more like about if your product can deliver added value, if you are delivering a better yield than someone else is what really matter. Like, so I see the point like of improving what we are currently doing in terms of accessibility, a better like color scheme or stuff like that. So we are working on that for sure. We will have like a better things that what we are like what we are currently offering. We will see, and we will iterate. Like, it's taking just a few days to update the whole UI and updating the CSS stuff. So it's like definitely not a big deal, and we can iterate every week if we need. So, and I suppose when we will have V3, we will have a better foundation, a solid foundation, and we can start like doing user testing and stuff like to really listen better our community and not just having like random feedback on Twitter or Telegram, but a more structured approach regarding how to do product development with like user testing and like working in sprint like of 2 weeks or stuff like where we have a more focused roadmap and we know what we need to build every 15 days basically, and testing and learning from what we are shipping basically. We are not currently doing that, and I think as we evolved, we need to go into that direction of listening more to our user base basically. I think it's a normal evolution of what we are doing.
Yeah, 100%. I like the fact that you're open to that, and I feel like, you know, if there is feedback about changing the design or whatever, I mean, at the end, who cares? Like, if it's going to bring more liquidity and capital to the platform, then like, who cares? Ultimately, we want to see that happen. And I love the fact that even right now, like, you have the choice to switch between, you know, one or the other. So, you know, people have the choice to see how they want the UI to look. But I like the fact that you're open, and I agree, because like I feel like this topic has come up before, and I feel like if people are requesting, I think it almost sounds like some people want more of a, I'm going to use the word like quote unquote like professional or more professional look. Not that I necessarily agree with that. I personally keep it on the 80s. I like that. But I mean, it's good that we're listening to the feedback that we're getting, and ultimately, we just want to see more liquidity onboarded.
Yeah, and it's definitely something like I was doing product development since the last decade, like for agencies or like customers I was working for. So is when you're building something is you think you can go really quickly and just keeping your head down, not listening too much to your community and just shipping stuff every week and see like if you are building they will come. I think it's the wrong strategy. So after like when you have solid foundation, you know that your basics are there and you can start iterating, and listening more is definitely something you should do, and for every product. And like it's kind of harder to do it at an early stage, even if it's really needed. But I can, like for small team is sometimes a bit tricky to do that, but like we are going to be more organized in the future, so it's something that we can afford, I suppose.
Yeah, I go back to that Andre Cronje article a lot, because I do it is really true. Bull market crypto, bear market development, and I do think that, you know, organization is something that's key for the health of a project, but it is so very difficult to maintain in a, you know, in a scene that's so crazy as this. So I do think that as the markets reduce, I think that all the companies that have lasted and thrived through the bull market are going to really find the next couple of years a great time to kind of cement themselves and organize and innovate.
Yep.
I think it's also important to note that V3, you know, the whole goal of MPH as a base layer in a sense, and to be built off of and create structured products is not, the UI is not going to be very important to an actual protocol or an institution building something, so much as, like you were mentioning, the normie using a BSC or a Polygon or something that has cheap, low fees, that wants that Coinbase, Aave, you know, simple, straightforward UI design. That I think that when V3's out, the structured products are going to be the main importance. Not that I don't support some sort of design change. I do think I am looking forward to seeing what that does for TVL, just from the common person, but I don't see that as a huge hurdle to jump past with V3, in my opinion.
Yeah, and like just a reminder for everyone, like with V3, we are mainly targeting to improve also, like improving also, but focusing on improving the developer experience to make it as easy to develop something on top of 88 MPH as it is with Compound or Aave. So at the end of the day, like whatever the front end you have is like not really what matter right now, especially when you are like evolving into a high gas price. Like is not like the retail that will use 88 mph, is more like vault or yield aggregators that will deposit stuff into 88 mph. And like we are discussing with partners who are like building nice fancy front end for their user base with like mobile app or stuff like that, where basically they are offering you for free a fancy UI to offer like under the hood your product like 88 mph. So, and we are not in Web 2, there is no wallet garden. Everyone can plug into our smart contracts and build whatever UI they want for 88 mph. So yeah, it's kind of like different, I think.
Guys, we're nearing the 90-minute mark on the call.
Yeah, just finishing quickly in 1 minute, I wanted to bring something because I made a promise to someone. There is Ichi protocol. They were in the call last week and they posted something a few hours ago on our forum. I'm posting it directly in general. So it's an invitation for your feedback, guys, related to what we were discussing with them, creating a 1 NPH token directly on each protocol. So they posted their proposal. They are asking feedback. So the main process we have currently for the proposal is there is a 7-day windows where we are like discussing that openly into the forum. I will announce that more officially in our Twitter in a few minutes after our call, but I wanted to post it here, like you know that it exists. So I invite you to go there and comment, share your ID and feedbacks related to their proposal. So that was this. And the last news I wanted to share with you guys is the Insure Ace pool. We have currently the best offer for insurance related to 88 mph on Insure Ace. I will share the link also, like that you know directly what I'm talking about. I think I posted a few days ago on our Twitter, but just a nice reminder for everyone.
On Telegram, we had that in the announcements and on Twitter.
I see.
Kind of went under the radar with everything.
Yeah, but it's really a good deal if you're looking for this kind of product. It's the best premium you can find for 88 mph currently on the market. So they did a great job at like first evaluating the framework of risk, because like basically it's their business for doing that, and they come with I think right now the premium is 8%, and you can insure up to 1,000 ETH worth of value locked on 88 mph. So it's really the best deal you can find. I'm sharing it also on the general channel here. So it's
Just
really cool.
Just 1,000 ETH, no big deal.
Can you repeat that?
I said just 1,000 ETH, no big deal.
Yeah. So yeah, it's really cool to see that, and I think it will get better as the month pass. Like we will have better premium if we prove that we can stay solvent, if we prove that there is no big smart contracts risk uncovered. The more we will invest into security and solvency, the better the premium will be for this kind of product. So the end goal is like having something that is close to 5% or like under 5% premium before the end of the year will be awesome. And also, yeah, trying to build some credit default swap with them or like other layers of insurance around 88 mph will be awesome. Like currently it's just smart contract risk, but maybe later we can have also financial risk covered with this kind of protocol. So really excited by that, really excited by the partnership. And it's a nice team. And yeah, they work really hard for developing all of that. So thanks to them. And yeah, that's the end of my updates. Sorry guys if I'm taking too long and talking too
No,
much.
no, not at all. Not at all. This was a great call. Very informative.
Cool. So I think that's it.
Okay.
Nice, man.
Okay.
Yeah, good. We'll send out
Um,
the prize to the best questions for sure.
Yes. Okay, so let's bring this call to an official close. We want to thank everyone for joining, as well as Rari Capital, as well as UniWhales. The recording will be posted in the chat, so please look out for those. And we're looking forward to having you guys on our next call. Thank you for everyone for joining, and we'll see you guys soon. Stay safe out there. Hopefully, it's not a bear market and just a small little correction.
We'll be fine. Thank you, Whipper.
Don't say those words. Don't say those words.
Bye guys. Have a good one.
Bye, guys.
All right.
Have
Thanks,
a good
everyone.
one, everyone.